And so the reason why we use VOO is because in my mind, I can have the entire stock market as my savings account. You feel me? Whereas with the QQQ, you don't have all 11 sectors inside of there. You got maybe 2, 3 at best. Majority technology, 100%. And so the goal now is to say, okay, QQQ, I don't mind trading you, but I don't want the volatility in that, you feel what I'm saying, as my savings account.
What's up, Trap? It's Amari. I'm back. Last time you told me to expand my portfolio with a chip company. Now that Nvidia did a stock split, do you think it would be good for me to still get into that? Or do you have any other suggestions that I could do? Thank you.
Okay, young. So, I actually like it around these levels, 119, 122. I don't mind you getting it here. Another company I like, I want you to wait on it. I want you to wait till Broadcom does this 10-to-1 split. Let's see what that look like. And maybe you may get that around 150-ish. Or you can go TSM. I like you going TSM. I like you going AMAT. I don't like you going AMD. So I don't have a problem with you getting Nvidia here. You got one? So let's build up on that one then. I don't want you to spread too far. But I also want you to look at TSM or AMAT. Add one, not all 3. So you already got Nvidia. Add one more, but not all 3. So go Broadcom, TSM, or AMAT. But if you go Broadcom, I want you to wait till it's split. I like that. Let's go. Let's shout out to Moms, man. Let's give Moms a clap. It's my welcome day. We got to find something else to get on, Shator. We ain't watched nothing since Walking Dead. I feel like we grew apart. We went through 11, however many seasons, and then we just grew apart. All right, let's go, Tootie.
Trap, what's up? It's been a minute. I just want to know, what do you mean by you watch the market from 9:30 to 10:30 and 3 to 4? What specifically are you looking at? Are you watching CNBC? Are you looking at the S&P, Dow, NASDAQ? What exactly are you looking at? Thanks, Trap.
My dog walking.
With a cart, with a bag.
He putting the baskets up. My dog Miguel. Bro, Miguel always gonna give us something unexpected. He not gonna never give us nothing normal.
Look at the camera.
And he ain't looking at me. He giving me this. Hey, Trap. What you looking at? Evidently not you, my dog. So what happens is, from 9:30 to 10:30, I call that like the power hour. That's when you're gonna have, that's when human emotions set in. So that's all human beings making that. So then from about 11 to 2:30-ish, it's algorithm trading is what they call it. And then around 3 o'clock to 4 o'clock, humans step back in. So that's what you get when you get that. Matter of fact, I need to call my dog Peter, man. He texted me yesterday and I ain't texting back. So that's what we're looking at. And all of it, Miguel, I'm looking at everything. I'm looking at the S&P, I'm looking at the NASDAQ, I'm looking at the Russell. I don't really cater too much to the Dow, but the S&P, the Russell, and 100% the Russell. So for sure. Good job, Miguel. Love that question, brother.
Hey, Trap, hey family, happy Tuesday. So my question is, how can you differentiate between if this is a genuine rally or just a temporary spike driven by speculation? And also, what key indicators do you look for to determine whether a rally is losing momentum or if a correction is imminent? Thank you.
He's trapping with this chat.
I didn't hear the question. I didn't hear the question. Thank you, Queen. You definitely appreciate that warm hug you just gave us. First genuine rally and speculative rally. In my mind, I'm compartmentalizing like, okay, the difference. So a speculatory rally would be a rally that is based off of, let's say, GameStop running, right? That is speculation. We are guessing that the market is going to follow suit. A genuine rally is a rally that is predicated by earnings, increase in earnings, or some type of value that has been added to the market, right? When we say that, we mean, so, and I'll be honest, there were parts of Nvidia's push in the market that were speculatory. Yes, Nvidia had great earnings. They beat expectations, which drives the market. But then it was the idea how everything around it in the market rolled with it, right? So it was kind of a genuine rally that was based on speculation as well, because the market says, remember, the market is a forward-looking mechanism. And so because it's a forward-looking mechanism, it wants to find reasons to be optimistic. And then that optimism can be, what's the word I want to use here? Word right here. That optimism, exaggerated. The optimism can be exaggerated. And so that's how you get a 9-day rally based on one thing, right? Or you can have a GameStop rally that pushes the market one way. It's all speculation. Now, what do we mean by a genuine rally? In my perspective, that is a rally that has a fundamental case. So when we say earnings have grown this far, or earnings have increased this much over time, that tells us that the market has now found a catalyst to follow suit in. Or let's say the Fed says we're going to cut rates. Boom. The market has now found a story with a catalyst to run up in, which is good. So those are the two. Losing momentum. So this is kind of a theme that I'm about to get into. So how do you find when a market is losing? How do you find when a rally is ending out? One of the things is when, prime example, when the news of a thing happening no longer makes the market move. Watch this. There was a time last year earlier this year too, when war no longer affected the market going down. Because it was baked in, this is going on. Right? So the initial concept of something happening in the market causes a reaction. Right? The initial concept of something, the initial news about something causes the market to get a reaction. And then what happened is, watch this, over time, AI will not be what pushes the market anymore. Because the market will get accustomed to this news, right? And so you'll see, how do you know that it's losing momentum? When the stock market stops reacting to it the way they used to react to it. Right? So right now AI is freaking, you say it, somebody said it 16 times, and then it runs. But there'll come a time where the market will say AI, and the market will say, what else you got for me? And then, she asked me 4 questions. And when is a correction ending? So to see when a correction is ending, you would have to understand, when did it begin? And so when you start seeing the market pivot to, think about it, when we was in September of last year, we saw the market pivoting because we saw that the interest rates were, not the interest rates, we saw that the 10-year was going down, and we gradually saw, watch this, news about the war no longer affecting how the market responded. And so you know the market is pivoting when you see the same news now driving the market, rather than it's taking the market down. Man, nobody else don't ask me 4 questions at one time, man. Nobody else don't ask me 4 questions. Golly, man. Great job, Queen. We got one more?
Yep.
All right, let's get to it.
Pastor Trapp, this is Horace calling you from Tampa. And I was just wondering if you could give us some insight as to the differences between the VOO ETF and the QQQ ETF, and why you use the VOO as your savings account and you use the QQQ as a more aggressive investment tool. Thanks.
All right, I got you, OG. So, first of all, amazing question, OG. Definitely appreciate it. Great question. All right, so the reason I use the VOO as my savings account, okay, back up. What's the difference? So, with the VOO, you get 508 stocks. Those are the biggest companies in the market. Supposed to be the best 500 companies in the market. When you get the QQQ, you get 90, mostly technology stocks. There's a few financial stocks in there somewhere. And so the idea for me was using using VOO as my savings account. I was able to use the best companies in America to grow my money slowly. And so what happens is when you think about it from this perspective, VOO, you get all of the best technology stocks, you get all of the best banks, you get all of the best industrial stocks, you get all of the best consumer stocks, you get Amazons, you get all of the best companies. Now, the thing about that is you rarely get like 30, 40, 50% returns with the S&P 500. The reason why is because you have a mixture of aggression, you have a mixture of value, and you actually have a mixture of companies that are on a decay. You have oil, you have basic material, you have all 11 sectors wrapped around in that VOO. And so the reason why we use VOO is because in my mind, I can have the entire stock market as my savings account. You feel me? Whereas with the QQQ, you don't have all 11 sectors inside of there. You got maybe 2, 3 at best. Majority technology, 100%. And so the goal now is to say, okay, QQQ, I don't mind trading you, but I don't want the volatility in that, you feel what I'm saying, as my savings account. Does that make sense? So OG, that was the idea behind that.